Hi investors, Joe here. Let's get serious for a minute. So you blew up your account. What the heck do you do? Maybe you had 100 grand and now you have 20. Maybe you had 50 grand and now you're down to 5,000. Or maybe you had 10 grand, now you're down to 1,000. The pain is the same, right? It's real. And I'll tell you what, no amount of swearing at yourself or cursing your luck or cursing yourself or wishing, none of that's going to bring that money back. It's gone. So let me give you 3 concrete things you can do after you've blown up your account. Let me just say that this is not financial advice. This is just for education purposes. And I usually say that this is for entertainment. But no, this isn't for entertainment at all. This is very serious. There are many stocks that have gone down 80 or 90% in the past year. And a lot of people have gone through a lot of financial and emotional heartache because of the losses in their account. So, number 1, this is an old Will Rogers quote. If you find yourself in a hole, stop digging. If every morning you wake up and your account is down and the balance is just bleeding off over and over again, then stop. Make a hard stop. Don't do any trading for a week, Monday to Monday or Sunday to Sunday. And if you don't have any sell stops in place, for goodness sake, put them in at 10% or less, 5%. And then start looking at your previous trades and figure out what you're doing wrong. It's one of these 4 things. 1, you're letting FOMO get the best of you, fear of missing out. You're chasing stocks once they've broken away from proper buy points. You're buying stocks that are overextended. Or B, you're buying stocks in downtrends because they're cheap. Look at Zoom or Peloton or Robinhood, right? People are buying these stocks all the way down. Don't buy stocks in downtrends. Or you're buying stocks that are chopping up and down, moving sideways, and you keep getting stopped out over and over. Or C, you went all in on 1 or 2 stocks and you got caught on the chin, right? Even Mike Tyson in his heyday, if he got caught on the chin, he's going down. And similarly, you can buy the best stock in the world, but there can be a bad market event or something unexpected with the company, and it can blow up your account. Just look at Tesla's fourth quarter earnings a couple days ago, right? That's an example of that. Or D, if you're using precise entry points and you've got good stops in place and the fundamentals are strong, then it's just the market. The market is wrong. The market is going down and you're swimming against the tide. Or the market is too volatile and it's chopping you up with paper cuts. So then you got to go to all cash or nearly all cash and maybe try some shorts if the market is down. So that's number 1. Number 2, when you've lost a lot of money in the market, human nature is to put the pedal to the metal. You feel like, oh man, I got to get that money back. And you go on margin and you start losing discipline, right? And you start doing the things that I mentioned from number 1, FOMO, etc. And then your losses accelerate. Instead, you got to do the opposite. After you've done your full stop and analyzed what you've been doing wrong, if the market is viable and a good part of the year it is not workable, then you get back in, but you cut your position size way down. If you buy $10,000 blocks, then you go with 1,000, right? If you normally buy $1,000 blocks, then you buy $100 at a time. And you don't look at, when you sell, you don't look at the amount of profit you made, because it's going to be small, discouragingly small. You're just going to look at the percentages. See if you can start selling stocks for 5%, 10%, 15%, 20% profit. And don't look at how much those sales are making in dollars. And then when you start ringing up some successes, when you make 3 successful trades in a row, then you add a little bit incrementally and you start working your position size up very, very slowly. Baby steps. Then the last thing is you got to flip your mindset. You didn't lose a bunch of money. You know what you did? You paid tuition. And so you paid tuition, and now you got to forgive yourself. You aren't stupid. You aren't an idiot. You aren't a moron. You aren't a failure. You aren't, worthless. You made some mistakes. That's all. And now you're going to learn from them, and you're going to not do them again. And then as the market heats back up, you're going to earn your money back slowly. And if you keep making investing a priority, and if you stay focused, you keep learning from your mistakes, then you're going to be a winner in the market. I believe in you. You know what? I believe in myself too. Take care, everybody.